Don't forget, I'm one of the only YouTube creators that got blessed with the Joseph Robinhood Biden coupon. Link down below from Robinhood. If you click that link and sign up for Robinhood, you will get 4 free stocks from Robinhood. One when you sign up, link your bank account, you don't have to deposit any money. And on February 1st, Robinhood has personally promised me everybody who signs up before January 31st will get 4 free stocks in total. 1 when you sign up and 3 on February 1st. Hey everyone, me Kevin here. In this video, I'm going to break down a big mistake that I made. Actually, multiple big mistakes. Because remember last week, I'm like, yeah, okay, so I'm pretty good with my stock portfolio. I'm pretty satisfied. I'm gonna go on a stock diet and I'm just not gonna buy stocks for a little bit of time. Well, let's just say over the last week, I basically cheated on my diet to the tune of just shy of $1 million. To the tune of exactly $892,203.69. And in this video, I want to give you a brief overview of my theses behind some of the stocks that I made purchases on, why I would be making purchases on these particular stocks, and well, hey, any other kind of lessons that we might be able to talk about. So the first that I bought was EXPI real estate, and that is, well, I'll explain that in a moment. But what I want to show on the spreadsheet here, my purchases in the last week, is I actually wrote next to this one, lame limit, and then I'll fill in the other ones here as we go through this. But I wrote lame limit because this is like, people are always like, Kevin, why don't you place limit orders when you do your orders? And I personally don't like doing limit orders because when I place my order for execution, I want that thing to execute like now, please. Well, unfortunately, when you trade after hours, you have to place limits. So I placed a $200,000 limit order after hours, but it missed by like $1 at firing at $86. I think I missed by like $1 because it had a little spike right afterwards. And the limit never executed. The next morning, I went in and I had to pay an extra $10 per share, and it's like, oh. Anyway, so these purchases probably averaged right around, and we'll pull up Webull in a moment, but probably averaged around 96, 90, somewhere around there, $96 for EXPI. This stock is splitting on January 29th. It's doing a 2-for-1 stock split. This particular company, I so strongly believe that Wall Street is not paying attention to this company. Now, obviously, the stock split is going to bring a lot of attention to this stock. And as with what happened with Tesla, we could see a sell-off after the stock split. So I don't always advocate running into these stocks as they're going up. I have had a large position on EXPI already before the stock split was announced. But now it's almost kind of like lit a fire under my butt to say, okay, this is going to create a lot of attention to EXPI. A lot of people are going to start doing fundamental analyses on this company. As this company continues to smash earnings, I think we've got a real issue for being able to buy this stock at the value that I like. Now, basically, here's what you got to know with EXPI. EXPI, rather than replacing the real estate agent, because a lot of people, they hear real estate agents or realtors and they think antiquated. Realtors are going to go away. As a real estate broker, I do not think real estate brokers are going to go away. Even if we, and which I think would be awesome in the future, even if we use Bitcoin to transact securely real estate transactions, people don't walk up to each other at a house for sale and go, get my Bitcoin and buy the house. There's so much involved, from inspections to lending and title insurance. And now, this is not saying that you can't for sale by owner a house, you can't do it yourself. Of course you could do it yourself. You could do it all yourself. But as a real estate broker, I know how much of almost a therapist I become to keep a deal together. And it's not just the buyers and sellers. It's the agents, it's the lenders, it's the appraisers, it's the inspectors. It's insane. It's all that, right? So I don't think that real estate agent service is going away. But what's crazy is, oh my gosh, I'm going to pull this up. This is embarrassing. So this is probably one of the first YouTube videos I ever made that I'm going to pull up. And it goes right into this line of thinking right here. And if I have it here, it was why I don't work for a larger company like, why I don't work for Remax or Keller Williams or one of these massive companies. And this was from back in 2010 or 11, back when I first became a real estate agent. I thought, oh, I should have marketing videos on my website. And so people are they always regularly ask me, like, why don't I work with a large real estate company? Oh my gosh, here it is. It's private. It has 74 views. We got to pull it up. Let's pull it up together. Let's watch this together. It'll be funny. Oh man, I can't believe I'm sharing this. I'm going to look like so different. Okay, here we go. Ready for this? Why don't I work for one of these big name brands? Simple. Because my name is my brand and my face is my logo. My marketing was crap. This looks like crap. It's so bad. It's so embarrassing and so cringe, but it's like green screen and simple because my face is my brand or whatever, or my face is my logo and my name is my brand. I didn't even have Meet Kevin back then, but it was true. And that's one of the reasons I'm so excited about EXPI, is because to me, one of the things that was so cool about becoming a real estate agent was I realized people didn't give a crap what company I worked for. They didn't care if I worked for Prudential, which is now Berkshire Hathaway, or Remax, or Century 21, or Keller Williams. They didn't care. All they cared about was who's the guy that's picking up the phone, answering the text messages, and teaching me about real estate. Well, this is it. It's me. Not the company I work for, where I hang my broker license. So where does EXPI come into this? Well, EXPI comes into this because EXPI says, hey, why don't you leave your regular brokerage, keep more of your commission money as a real estate agent, join EXPI, we'll give you virtual training so you're not missing out on training, and after you pay us a certain amount, you get to keep all of the rest of your commission, because usually you split your commission with a broker. But on top of that, EXPI has gamified the agent recruitment model, which honestly I should be a part of, but I don't want to hang my license anywhere else. I'm not going through that. But if it weren't for switching my license, it'd be something to consider. But yeah, I mean, like, let's say if I hung my license with EXPI and I'm like, hey, come join EXPI, and you joined under me, I would always get a little bit of a slice off whatever commissions you made. It's a classic MLM structure, but it's brilliant. Not because of the MLM structure. That's a great thing for recruitment. It's like self-fulfilling recruitment, right? And they give their agents stock of the company too, which is also brilliant because it gets people hyped on the stock. Which is not always a good thing, but oh well. But really, the model of switching agents away from the bigger brokerages to an at-home style brokerage, it's here to stay. And that's not to say that Remax and Keller Williams and that they couldn't adapt. They absolutely can. The problem is they're not, and they haven't been, in my opinion. And who knows? Again, that could change. But for the time being, EXPI it's on a rocket ship. Its stock has already been on a rocket ship since we started buying it at around $42 in the course, which is nice because it's over double now. But I think the potential is there that the EXPI rocket ship is just beginning. So I did put more money into EXPI. I personally, looking back, I probably should have put in more money because I really want to buy this company under $100 per share, which now it's over that. But oh well, hindsight, right? Okay, great. Boom. Next company. Let's talk about the next one. So the next one is CCIV. It's Lucid Motors. I told all of my course members when I bought this. I bought this. I spent somewhere around, what did I buy here? I spent, what is this? I don't know, this is about $500,000 right here that I put in. Now, this is very speculative. So let me just write this down here. This is, in my opinion, low risk. Like on a scale of 1 to 10, 10 being very risky, in my opinion, EXPI is like a 3. You know, maybe like a 3.5. Like an Apple would be like a 1. Right? Like very, very low risk. This is like a 3.5. Okay, CCIV is probably like an 8 to a 9, maybe more like an 8.8, something like that on the risk scale. So it's definitely more up there, and that's because right now this is a SPAC merger, which just when you hear SPAC, you should be like, oh, Kevin, what are you doing? But anyway, it's a SPAC merger, and it's just a rumored merger right now that it's going to merge with Lucid Motors. Lucid is a company that I'm really excited about. I personally believe that Lucid has the potential of being the American NIO And this is going to be a company that hopefully one day in the future, I'll be able to go to their showrooms and see these vehicles. Who knows, maybe we can, if we get enough excitement over Lucid, we can do like a test drive or something like that to really get a good beta look at these because they're beta testing the cars right now, to get an initial look at these cars some more. But I'm excited. I'm very excited about this car brand. There is a danger though, because right now, look, they priced this company at about $10 per share of the SPAC. They said that was worth about a $15 billion valuation. We don't know yet. That means that CCIV is only getting a slice of Lucid, which is very normal because they're going to keep some of the other shares, and this is how you value a deal. That means around $20 per share. I misexplained this in a prior video, so that's why I'm clarifying this here. I always like to, if I make a mistake, I want to clarify it and tell you I make a mistake. This is why you always want to subscribe and get the other follow-up videos, because sometimes things change. But anyway, you rarely make mistakes, but it happens. But anyway, at $20 a share, this is really like a $30 billion company, and I'm even writing millions here. So at $20 a share, $30 billion as the value of CCIV, it's starting to get a little pricey. Right now, the thing's selling for like $23 a share. It's on the pricey side. So there is a danger with Lucid that with Lucid, we could end up seeing this company revert in the short term down. And that's because they're not delivering vehicles yet. However, once these Lucid cars start hitting the road, what's going to happen is psychologically and even market cap wise, people are going to start seeing these Lucid sedans on the road. They're going to go, what company is that? Oh, that's company Lucid, you know, whatever ticker symbol it ends up being once it converts to Lucid. It's probably out there, but I don't have it right now. But anyway, oh, those are Lucid cars. It's selling for $23 a share. Oh, you know, what is that? A 33, 34, $35 billion market cap, whatever. Okay, well, Tesla's like 900 bill. That's a fraction. And how many vehicles is this company producing? What? They could do 30,000 per year, which is basically as many as XPeng does. XPeng does probably a little bit more. NIO does a little bit more. NIO did like 43,000. 43,000 last year. This year, NIO could probably break 100,000 this year, so we'll see what happens there. But anyway, Lucid's going to have that potential of expanding as well. We can't buy NIOs over here. So you gotta ask yourself this, if you can't buy XPengs or NIO in America, yet people in China are buying these competitors, people are gonna buy the American competitors as well. Now, personally, I really like having as much money as I can in the top stock. In an industry, and that no doubt is Tesla. But let's be real and just put the scale up here. My Tesla portfolio or my Tesla holding is somewhere around $11 million right now. So if we add up what we've got in Lucid, because it's gone up, I think it's like 590. We're really talking about 590 into Tesla here. We're talking about 5% of what I have in Tesla is in Lucid. Then if you add up what I've got in NIO, which is roughly about the same, so NIO, XPeng, and Li Auto together, I think is maybe 350. So we start adding up some of these others here. We get a total of, what is that? A little around a 1.5? Yeah, 1.5. So that's around 15% of my portfolio, not of my portfolio, of what I have in Tesla, 14%, in these other car companies. To me, that's not a bad thing to have, is to really try to separate or start buttering out my portfolio a little bit to some of these other competitors in the EV space. EV is probably the area that I'm most excited about. I've got some money in cannabis, somewhere around maybe $325,000 in cannabis. I mentioned to course members, I think it was Tuesday, it might have been Wednesday, Tuesday or Wednesday, that it's possible, I think it was Wednesday morning, it's possible that the cannabis trade is going to fade until we actually get some enthusiasm again from Congress. And cannabis ended up selling off a little bit on Thursday and Friday, today being Friday. So that's okay. I'm not going to sell out any of my cannabis trades, but one that I really think is here to stay, that I'm not worried about fading out because Congress just doesn't talk about it, is electric vehicles. But that also should include my other place. So the other stock that I purchased, and this was all while I'm on my diet here, just diets suck. So I bought some more Shift. These guys are great. You know, these are in the green over here. I kind of wish they weren't. I kind of wish they went on sale a little bit more so I could buy them more. So if these companies fall, if EXPI and Lucid fall, I will buy more of these. Shift has pretty much been flat for me since I bought it. I bought Shift around $8, and it's been pretty flat. This company, I really think, and they're starting to run ads even in my area now, which is crazy. Like, the amount of money they're spending on ads is insane. They're really trying to compete with Carvana and Vroom. But the reviews for the used car selling service Shift are through the roof. The website traffic is through the roof. The reviews are through the roof. This is a SPAC that trades for like $8.20. It's already merged, so you're not doing anything speculative anymore. What you're doing with Shift is you're really buying a value play. You're buying a company that is so misvalued by the US stock market that when this thing corrects, to me, this is, when Shift corrects, this is an easy three-banger. Unfortunately, and this is what's tentatively, in my opinion, holding Shift back. Right now, you know what's sexy? What's sexy is, and I know we're talking about stocks here, okay? But what's sexy right now are anything related to electric consumer cars, right? Very sexy. Electric commercial cars, those could be, well, I should say vehicles. Those could be buses or light commercial vehicles, transport, semi, so on. Very, very sexy. Hydrogen. As of recently, biofuels. Very sexy, which obviously relates to transportation as well. What else? Oh gosh, come on, the genomics. I can't even spell it. Absolutely, here, we'll just write genome. There we go. Wait, then I should be able to just say that. Aha! So anyway, Kevin. Anyway, genomics, seriously, that's, it's so sexy right now. What I think has fallen out of favor after the vaccine hype, but I think will be huge over this next decade. These mRNA vaccines, absolutely insane. I mean, these delivery tools for getting technology into basically the human body and change DNA is scary. Huge, huge, huge potential. My issues that I have here, well, first of all, electric consumer cars, huge. I'm there. I'm huge. I'm all in on this. Electric commercial vehicles. Okay, here's a really big danger you have to be careful of with electric commercial vehicles. Consumers don't do this. Consumers buy like, oh my gosh, this car is all the rage. It's sexy. It's awesome. Great. That's one of the reasons Tesla does so well. But when it comes to electric commercial vehicles, businesses don't care about that much. Businesses care about break-even costs. So break-even cost analysis. How quickly am I going to break even? Your fastest BE in commercial electric vehicles is in stop-and-go type vehicles. And those are going to be like delivery vehicles, right? So yeah, I mean, I'm not going to lie. I'm interested in Lion Electric, which is going to SPAC under ticker symbol NGA right now. The reason I'm not invested in Lion Electric is because Lion Electric has a commitment to deliver 10 vehicles to Amazon, but I have zero evidence so far. And please somebody provide me the links and the evidence because I want to buy this company. I want to buy Lion Electric. But the problem is they're like, yeah, we have a commitment from Amazon to deliver 10 vehicles. Bro, where are the deliveries? I want to know that they've actually been delivered because Amazon says, hey, we're going to commit to pre-ordering 2,500 electric vehicles from Lion Electric. And I think they want to do like 10,000 over the next 5 years. And by 2030 and 40, Amazon has all these goals and stuff. And Amazon's taking options in Lion Electric. So to take potentially up to a 19.9, I think it's percent stake. Yeah, percent stake. That's great. All of that is great. But Amazon, this is the danger. This is where, like, if you're in NGA, I want you to, when you hear me say this, do not take this as a personal attack. Take this as your Achilles heel. I'm just pointing it out to you. And that's the only reason I'm not in this, because I love this stock. The school buses thing, like, everything makes sense. But what makes me nervous is if Amazon gets those 10 vehicles and Amazon cannot verify that their break-even cost is worth it to convert their fleet, Amazon can say, yeah, 2,500, no thanks. You can keep your options. No thanks. What's going to happen then, right? Scary. That is more scary. And so that keeps me a little bit nervous about NGA right now. And that could end up being a huge mistake. I realize that, but that is one of the reasons I have more money in Lucid right now. Will I change my mind on NGA? I want to. I really want to, because I want more exposure to this commercial vehicle space. Ford is going to be another exposure to this commercial vehicle space if they can get the Ford Transit moving already. Electric Ford Transit. So we'll have to keep an eye on Ford as well. I'll talk about GE in just a moment. Hydrogen. Keep this in mind. Hydrogen, that's like a 10 years out play. And honestly, biofuels too. 10 years in my opinion. The decade of hydrogen and biofuels is 2030 to 2040. That's when we get hydrogen and bios. And honestly, if we're using hydrogen, I don't want to think about Hindenburg days, but it's possible. This would be another thing to look at. Can we get hydrogen plays? In which case, would hydrogen potentially cannibalize biofuels? That's something else to research. I don't know the answer to that. But I do know that electric is a little harder for planes. Batteries are heavy. I don't think you can do, and I'm not an engineer, but I don't think you can have electric jets. I think you can only have electric planes that are propeller driven. So that might continue to push biofuels and hydrogen for flying. But anyway, we'll find out more about that. Genomics, really, the mRNA, CRISPR technology, companies I want to be in, but I'm just not yet. This is where I'm right now. But I want you to know kind of where my head is right now. These, by the way, are the things that I talk about in my morning live streams when it matters, like when the market's open, when we can actually take action on these right away. So if you want to be part of that, remember you can, and I've got a few more trades to talk about here, but remember to use that link down below to join the courses. My birthday's coming up in 6 days. Use the coupon code, and there's a birthday coupon code down there, and any course you get will come with the live streams, but only the Stocks and Psychology of Money one, which is still that's like 80% done. I got a lot of lectures left to do in that one. But you get access right away, and you get the alerts when I do buy and sell. Okay, next one. Yes, I want to explain this. So Enphase. Enphase, really high margin energy play. And the reason I say energy play is Enphase doesn't do solar panels, but they do microinverters and they do batteries. And why that matters is because there's going to be a lot of competition from Europe. Germany's Q-cell batteries, Taiwan, China, huge competition in the solar space. And so I'm a little more nervous about panels themselves, but when I look at microinverters and batteries, next to Tesla, Enphase, that's a money play. That is a good company to be diversified into. You got high margin. I am actually going to be buying Enphase batteries, and we'll see how they stack up. So I'm excited about that. Anywho, then, so this company I put $50,000 into this week. It fell under 200, which is my buy under target for Enphase. I think it's above it right now. Etsy had some softness as well, but I didn't add to Etsy. Etsy is my buy under for Etsy's 225, which is not to be confused with my price target. My price targets are a lot higher for those. Okay, then just so you know that I'm not BSing, here's my Webull, and here you could see my CCIV. Here's some Enphase that I have. These are just overall profit and loss. I've had this account for a couple months now, but I just keep adding. Anyway, so I get the notifications while I'm here. I've got the EXPI down here as well. So just so you can see that I have these positions here. These are positions that I bought over the last couple of months. But what I want to do now is I want to show you the option that I bought. So I bought an option on another electric vehicle play. Now, this one is interesting. This one I think is going to make a lot of people nervous, potentially. But I bought an option on GM. I bought an $80 way out of the money call option on GM. Now, this is Robinhood, so make sure to get your 4 free stocks with Robinhood. I've only got that link. I'm pretty sure I'm like the only creator who has that link. So I got a really special link from Robinhood that if you do not have a Robinhood account yet, use the link down below, click it, open an account, and they will give you 1 free stock when you sign up and 3 extra free stocks on February 1st if you sign up for Robinhood and link your account with link your bank account with Robinhood. You don't have to deposit any money. Some people say you have to deposit at least $1. I confirmed with Robinhood you don't have to deposit any money, but you do have to link your bank account before Feb 1, and you will get 3 extra free stocks from Robinhood, which is pretty cool. So anyway, I bought this $80 GM call option. I think I'm fractionally up on it, but I mean, it's been a few hours, so big deal. Okay, it's up $210. So this is way out of the money too, and I know that. But I did that on purpose. It's a long call. First of all, I go with the long calls because I hate paying taxes, and this will force me to pay taxes at some point, but at least they'll be long term, so I'll save another, maybe 15% or something like that. GM, why would I buy GM? They've got a lot of debt. Their debt to asset ratio is high. It's like I think it's 70% or something like that. It's relatively high, and the big play for GM for me is the light commercial electric vehicle space that we talked about. Remember that stop and go space for electric vehicles that we talked about on the spreadsheet? Folks, that is going to be a big play for GM. Light commercial vehicles are huge in Europe. They're going to be huge out here for delivery. They already are. Stop and go. These commercial vehicles are going to be a big thing, especially since the more short term or more short distance these things travel, the lower the break-even cost is for these vehicles. And so far, you've already got GM showcasing, for example, a potential, FedEx mock-up here. And keep in mind, I'll pull this up here. They all do these mock-ups. These mock-ups are just for marketing, so you want to always keep that in mind. It's another thing to be cautious of as well when you see companies mock up Amazon on it. Unless they actually have delivered vehicles to Amazon, just be careful, right? But anyway, these are just some designs of, again, the Amazon trucks and potential options for GM. It's fascinating to me. They call it the GM Bright Drop Division. But to me, something that we almost undervalue. See, look at this. Look at this. Last week, General Motors announced BrightDrop, a new division. And when was this posted? This particular article we're looking at here was posted January 18th. Yeah, look at this. GM BrightDrop electric vans. Last week, GM announced BrightDrop, a new division and brand, which will offer an ecosystem of electric first to last mile products for a logistics company. The flagship product of the new brand is the BrightDrop EV600. And then it's on the Ultium battery system, blah, blah, blah. Okay, great. So what's fascinating about what GM is doing is GM, in my opinion, they've got a whole website that doesn't even look branded GM. It's branded BrightDrop. That's incredible. What's so fascinating about GM to me, and I've been reading a lot of analyst reports and research on this, is people see GM as the old school grandpa company. And back when I was researching Nikola, I got really offended when Nikola partnered with GM because I'm like, why would you partner with GM? Like old school, outdated technology, they're gonna be like a Volkswagen, which Volkswagen, they're having trouble in certain aspects. At least the Wall Street Journal's bagging on them pretty hardcore. The Wall Street Journal says, they might be good mechanical engineers, but they're not good software engineers, which is a slam. It's a pretty big slam. GM's playing this pretty differently though. And this is where you almost want to pay attention to GM specifically for this, because this is what you have, in my opinion. I made this reference in my live stream this morning. In my opinion, you've got this massive elephant here. Let's draw an elephant. Here we go. This is a pretty ugly elephant, but this looks nothing like an elephant, okay? This to me is GM. You've got this crazy elephant thing. And on the inside of this elephant, you actually have this like really awesome stallion. That's like a really fast and lean horse. Yeah, he's really fast. He's got a tail in him. But GM, because of its old school branding, basically, or what it has become known as, kind of makes you forget that, oh my gosh, they've got a stallion on the inside. And that's called not only BrightDrop, which is inside here, and on the outside it looks like a fat elephant, right? But on the inside you got the stallion. But they've also got Cruise. Folks, Cruise is a massive company worth $30 billion from inside valuation. Well, I mean, it's not really inside valuations when Microsoft comes in, but when Microsoft values it as a private partnership, basically at $30 billion, geez, the public market should be valuing Cruise even more. 2,000 engineers working on autonomous driving. They got the battery, Ultium technology. They got BrightDrop for these commercial vehicle products. GM looks like the sleeping grandpa, but that stallion on the inside, I think over the next 3 years, is going to explode. Absolutely explode. They got the funding. Now they're getting Microsoft involved. Look, again, my GM position is tiny, teeny, toony compared to my Tesla position. But just take a look at this for a moment. I mean, go to this. The EP1, I think this is the pallet. Yeah, this is just the electric pallet that they have. I honestly, I don't know if this is just like a battery powered or some kind of a pallet device here, which is neat. But the EV600, we want to pay attention to this and see how well this company does. And look at this. See, this is how they brand these cars. Look, zero tailpipe emissions. Great. It sends the signal of sustainability to companies. What do we got here? Over $7K in annual operating expense savings versus diesel alternative. Right there. See how they are branding to commercial clients? That is perfectly written for a fleet manager. Up to 250 miles of range on a full charge. And I think that, because I know that might not sound like it's a lot, it's actually pretty good for these short distances. And keep in mind, this thing is designed to carry weight. This is actually very similar to the to Canoo. Canoo, by the way, is starting to do pre-orders. Look at that, on their multi-purpose delivery vehicle. I actually own a little bit of Canoo as well. I think, I don't know, somewhere like 80 grand or something like that. I have invested in Canoo. And I've actually pre-ordered one of these multi-purpose vehicles. It would arrive like next year or something like that. I just think it's funny because I'm going to put my face on it. But anyway, it's like $39,000 is the vehicle. And look what they've got. I mean, it all comes on the same sort of skateboard design over here. And here's like your passenger, your commercial, your pickup, your sedan, and it's all in this. This right here, honestly, me just talking about this right now, I think I want to buy a little bit more of Canoo right now. Oh man, I mean, let's look at Canoo's price really quick on Webull, and then we'll decide. Oh no, I missed it. I missed after hours. But anyway, Churchill Capital. So here, that's Lucid. Lucid went up by 25.4% today. 4.7% after hours. Wow, that really pushed up. That's pretty great. But let's go ahead and I mean, it's nothing to get to GameStop, but GameStop. Congratulations if you're in GameStop. But here's Canoo, folks. Canoo is just beat down like a dog, and really Canoo, I don't know, I like this one. They ran up pretty high. They ran up to like 24 or something like that. Oh, $22, and then they kind of crashed back over here. But Canoo's a SPAC. It completed its merger. Not only are they doing a subscription model, but they're also selling the vehicle. Not bad. That's going to be good competition for GM as well. So it'll be interesting, though, because GM's going to have way more capacity, I think, than Canoo. But Canoo's one to pay attention to as well. So I might consider upping my position a little bit in Canoo. But all of these companies are so exciting. Anywho, so if we add all this up, I spent a total of $892,203 in stocks over the last weekend. And this was supposed to be my stock diet. So basically, I ate like a dirty pig. Yeah, and I'm sorry about that. So all I can say now is make sure to get your free stocks with Robinhood via the link down below. And folks, we'll see you in the next video.